This is the Friday edition of All About Bitcoin, a show dedicated to all things, questions, and markets related to Bitcoin, little b for the currency, and Bitcoin, big B for the network. A collective journey to understand, apply, and use this innovation, all Bitcoin, all the time. I'm your host, Galen Moore, filling in for Christine Lee and looking at the Bitcoin price. Bitcoin rallied today along with other risk assets after a speech by the U.S. Federal Reserve Chairman Jerome Powell affirming expectations of a tapering of stimulus this year and repeating assurances that current inflationary pressure is likely temporary. The CoinDesk Bitcoin Price Index, the XBX, is at $48,351.40 as I speak, up 2.91% over this time yesterday and up about 1/3% over the past hour. And now let's take a look at the chart of the day.
The chart of the day is brought to you by Crypto.com, the world's fastest growing crypto app.
The chart of the day comes from Glassnode, showing Bitcoin's hash rate alongside the price. In this chart, the 7-day moving average of Bitcoin hash rate is the orange line. The gray line is the Bitcoin price. The comparison shows Bitcoin's hash rate heading up, and as CoinDesk's Francis Yue reports today, industry watchers are expecting a continued uptrend, spurred by the recent Bitcoin price rally, with Chinese miners speeding up their migration to alternate jurisdictions and U.S. miners expanding capacity. And joining me to discuss what's happening on the blockchain and in the markets is our weekend review panel. CoinDesk Managing Editor of Technology Christie Harkin in Toronto, and Managing Editor of Markets Brad Keoun in Austin, Texas. Welcome, Brad and Christie.
Hey, Galen, nice to see you again.
Yeah, hey, we got a little reunion here.
Oh, it's like old home week. Yeah. So, Brad, start us off here. Jackson Hole, where from here? What did the events of today indicate, and why did the price react the way it did, and what can we expect?
I mean, in general, it's just another example of sort of topsy-turvy dynamic in financial markets where, we've had this Delta variant and it's totally, cases are going up and lockdowns are coming back and it's hitting confidence. People are getting a little more depressed. And as a result, perception is it's a little worse for the economy. And yet we have had pretty high inflation lately. And so a lot of the top Fed officials have been saying we really need to tighten up on monetary policy soon. But the economy's, all of a sudden has like kind of a cloud over it. And Powell today saying, he's not ready to commit to a certain date to start tapering their monetary stimulus. And so that's good for risk assets, from stocks to Bitcoin. And gold is also up, which sort of confirms that that's kind of the theme for today, is that they're not going to move anytime soon to crimp down on inflation. So yeah, Bitcoin's having a little pop here today.
And we've been in a rally for most of the month of August. Do you think that continues? We got a few days left in August, and then heading into September. What signals are you reading from the derivatives markets in terms of where people are positioned on this?
In general, leverage has not been super high. It's definitely not. There's not much froth in the market right now, based on some of those indicators. We are still kind of in the tail end of the dog days of summer in the Northern Hemisphere here. Labor Day weekend is coming up in a week in the U.S., and a lot of people are probably just enjoying these last couple of weeks of summer. In terms of the charts, the technicals, it looks like we might go up from here. We might go down a little bit, but it's probably going to be pretty steady as she goes here for the next week or so. And going into September, obviously, things will change one way or the other in September, I would think, just as everybody comes back.
Yeah, enjoying the end of summer. I wish I were one of those people. Christie, let's talk about hash rate a bit. If you would, you see the hash rate recovering. Is China back online? Are Chinese miners finding new locations? What can we understand from Bitcoin's fundamentals and looking at where hash rate has gone in the past week?
Yeah, it's been on an upward trend for the last 6 weeks now. But we just saw, I think, as you were discussing earlier this week, we saw a pretty significant uptick in the difficulty. It went up 13%. This is the third difficulty period in a row of going up. And if you look at, even though it's early days into this 2-week difficulty period, we're still seeing blocks getting mined fairly quickly, which would indicate that come the week after next, when the next difficulty adjustment happens, it'll probably go up again. And one of the reasons why this is happening, as you say, is there are some Chinese miners who actually are coming online a little surreptitiously, going, let's see if we can turn our machines back on if anyone will object. So we're hearing that sort of thing happening. Also, keep in mind that even before the Chinese mining ban hit in April, May, there was already a big push in North America, especially among mining companies, to get their operations boosted up. And many of the orders that they put in, the infrastructures, the energy deals that they've been making since early this year, even late last year, those are now starting to come online. Everything is falling into place in North America. So we're going to keep seeing that happening. According to Sam Doctor, a chief strategist at BitUda, he's told one of our reporters a month or two ago, I would have thought that the recovery is still going to be slow and it will be first quarter next year before we hit the previous high. But the hash rate does appear to be recovering faster. And Dave Perrell from Compute North in North America suggests it could take another 6 to 12 months before the hash rate hits that all-time high again. But it's going to keep going up. And beyond that, it should go up even farther.
So, Christie, looking ahead, as we think about more North American miners coming online and presumably perhaps more renewables-focused miners within that group, what do you think that does? I think, renewables and ESG were a significant blow to Bitcoin as its Q2 rally sort of came to an end. What do you think the prospects are for a fresh look at Bitcoin from institutional investors that are concerned about ESG? Is there going to be a there if they look? Are they going to find a better, cleaner Bitcoin if that's what they're looking for?
The jury's still out on that one, I think, in North America, because in North America, there are still quite a few natural gas possibilities. There's still quite a few. I mean, there is some coal, but a lot of it is gas. Not to say we don't have a lot of solar power and hydroelectric power as well. There's a huge mix. And I know that because a lot of these companies are really ramping up their infrastructure now, as opposed to dealing with old infrastructure that has, that was online before people were paying too much attention about ESG, they are making a conscious effort, if not to use renewables all the time, to try to make that part of their mix and to commit to carbon offsets. Take or leave that as you see fit. But carbon offsets are a part of their strategy. And they're becoming creative. And this is something that's been part of the Bitcoin mining ecosystem for quite a long time, because don't forget that the cheapest energy is often renewable. And it really is a race to the cheapest energy source if you're going to be competitive in Bitcoin mining.
Brad, if we can talk a little bit about institutional adoption. We've seen a few headlines break this week, I think. Can you kind of run us down who are the players from Wall Street that are making moves in Bitcoin over the past week?
Well, first, I just want to go back to, kind of the story of the mining and the hash rate and talking about institutional money. I mean, there's a lot of institutional money going into mining, setting up the operations and investing the capital to set up the facilities with the transformers and connections to the grid and everything, and also to invest in the rigs. And one thing I think is super interesting is that you are seeing, the what's happening with the hash rate is evidence that the market signals are working, because price is here, $48,000, and people are putting in X hashes, because they can make money. And so it's this industry keeps calling for capital. In terms of, your question, CoinDesk wrote the story this week that Citigroup is getting into Bitcoin futures, and Wells Fargo also set up a solution for private wealth clients. And that's just something that we've seen, is that, these huge banks sort of reluctant to be publicly, transparently, openly embracing Bitcoin, but they're still providing a solution to their rich clients because they don't want to turn those people away. And those people are demanding to invest in crypto.
We've certainly seen a recovery in the price of mining equipment alongside the rally in the Bitcoin price this August. And I wonder if you start to see then some of the capital that might flow into machines and infrastructure instead starting to flow into the spot market, and perhaps fueling the other side of that virtuous cycle, if you will. Brad, any thoughts on kind of how investors might play that?
I mean, in general, this is an early industry. People are still figuring it out. And as we've seen, there's just this clock turning of, decisions are made that, okay, this is how we're going to get into crypto, or this is how we're going to get into crypto. And then it takes time. And then over time, you see these announcements. I would guess, the fall. I mean, Bitcoin's doing really well this year. It's the third year in a row. And I'm guessing, people keep talking of stocks being at record, but crypto's doing better. I would think those capital allocation decisions, we'll probably start to see a lot of those in the fall. I don't know. It's just my guess, based on all the signals we're picking up.
Christie, let's close it out with a little bit from Ether. You and I were talking about this earlier. Ethereum analysts have noted that the Ether supply rate increase for at least one day this week was lower than the Bitcoin supply rate increase, obviously, the supply rate of Bitcoin being an important part of its investment story, and stock-to-flow ratio being an important kind of analytical narrative. I wonder if you can comment a little on kind of what we should be looking at in the weeks ahead in terms of monitoring, whether Ether is setting itself up as a viable alternative to Bitcoin in terms of that narrative of limited supply.
Yeah, we're actually going to talk about Ethereum here on All About Bitcoin, are we? So,
it's allowed. It's okay.
A new Ethereum block is mined every 14 seconds, okay? And 5 Ether are created with each new block. And this is going to keep happening till, I guess, the end of time, unless they change their mind. There's at the moment, no supply cap on Ether. Bitcoin, on the other hand, has a hard cap of 21 million Bitcoins. That's it. It's hard-coded into the protocol. Roughly every 4 years, the amount of Bitcoin issued from each new block gets cut in half. So today, that's how we limit ours in Bitcoin. Every day, every 10 minutes or so, we get 6.25 Bitcoin. In the spring of 2024, that's going to get cut in half every 4 years till 2140, roughly. And then no more Bitcoin can't create more. With the last Ethereum hard fork, as a way sort of to control their issuance, and I don't mean we and they, I'm not Ether or Bitcoin, it's just this is all about Bitcoin. A new burning process was introduced as a way to control the amount of available Ether being issued. So under EIP 1559, transaction fees on Ethereum are split up into a minimum fee called the base fee, which is now burned. So that Ether is gone. And there's also a priority fee, and then there's the Ether. But it's the base fee, the transaction fees now that are getting burned.
It's that burning that is then sort of reducing the net supply rate.
That's reducing the supply. Yeah. Exactly. So as a result, the upgrade has eliminated something like 100,000 Ether, representing 36% of the new coins issued since August 5th, according to EtherChain. So the thing is that with Ether, that net issuance, that's always going to be variable under this design, unlike Bitcoin, which is, TikTok, next block, that's what we get. So devs are the devs for Ethereum are hoping for equilibrium in terms of how much gets burned and how much gets newly issued. And so far, the metrics are kind of working out that way, but it will always depend on how much use the network is getting, which will affect the transaction fees, the base transaction fees, which will then ultimately affect the burn rate. And it can always get tweaked in a future hard fork. This is another thing about Ethereum. These sorts of changes they happen. The Ethereum devs will go in and just be like, you know what, we should change it this way. We should change the issuance that way. We can hard fork to do this or hard fork to do that. And that happens. They tinker with the supply and there's a precedent there. And that's fine. This is not a judgment call, but it's different from Bitcoin. That does not exist. And it's highly, highly, highly unlikely that Bitcoin would ever do that. So yes, there is a burn rate. And yes, the supply is starting to even out. But we're still at a point where we're not going to ever know how many Ether there are going to be ultimately. Although, we can kind of guesstimate. Whereas with Bitcoin, we know, and it's part of the value proposition of Bitcoin. It's hard-coded right into it.
Does Bitcoin care how many Ether there is? It does not.
Not a chance. And I can tell you in the coming weeks, if we're looking ahead, how will Bitcoin respond to this? Bitcoin ain't going to respond to this. Bitcoin's just going to keep on going.
Well, I think before Ethereum or Bitcoin mines another block, we had better wrap this one up. I think that's it for All About Bitcoin this week. Thanks very much, Christie Harkin from Toronto and Brad Keoun from Austin, Texas. I'm Galen Moore. And All About Bitcoin will return on Monday at 3 p.m. And don't forget to watch First Mover at 9 a.m. on Monday for your first look at the day's global crypto news. You're watching CoinDesk TV.